Okay, welcome to the Wall Street crossover show. I have in front of me Darren Sinden, the market commentator at Admiral Markets, somebody who's been in the markets for many years longer than me, because he's obviously much older than me. How are you today?
I'm very well, thank you, Zach, and it has been many years as well, more than I care to remember.
But the years of experience.
Oh, thank you.
So there we are. Right, I suppose we're sort of in the run up to the non-farm payrolls. Is that sort of like casting a shadow?
Yeah, I think it's noticeably quieter today, and I imagine it will be. We'll see the same in terms of what's going on in the market, and we'll probably have a similar feel for tomorrow, because it is the big number. Rightly or wrongly, it's the one that everybody wants to focus on, and it does dominate the week. And there's probably no prizes for getting too involved ahead of it. So.
Okay, all right. So let's start off with the show with the data released over the European session. What does this tell us?
Maybe not a lot, because we've had the nationwide house price index for May up 0.3% month on month, bang in line effectively, with the forecast of 0.3% gain in UK house prices. That's down quite sharply from the prior month, April, where we saw a 1% gain. But it strikes me that we, whichever one of these house price survey numbers you look at in the UK, you can find a different result.
Well, the only thing I suppose that people did get slightly scared about the election result, but in fact, even then, they weren't that scared enough for house prices not to just edge up according to that measure. So
no, it's strange, but the data from the Halifax and RICS has told us a different story in recent weeks. So I think it's not that clear what's really happening with UK house prices.
It's more an art than a science.
I think it probably is. It'd be nice if we could have one definitive survey. But moving on from matters UK to things that European wide, we had the Eurozone Services PMI number for May came in at 53.8. That was better than the 53.3 forecast and the 53.3 prior read. So so growth in the services. So it would seem anyway in Europe in May, but again, the PMI data is not conclusive at a Eurozone level or across the individual member states. Similar story really with retail sales. Again, a figure that the gents and ladies in the ECB will be watching closely, because as we've said before, the European consumer is key to the recovery of the Eurozone. Month on month, retail sales are up 0.7% in the Eurozone and 2.2% year on year. The 2.2% figure was a big jump over the March number of 1.7% gain, but if we dug down into the detail there, we'd find a really mixed bag of numbers across the European states, and again,
it's still a strong. I mean, it's decent. I mean,
and I'm sure that when we come to our last item here, ECB interest rate decision unchanged for anybody who hasn't seen the news already. Press conference, or presser as they call it these days, to follow at 1:30. I'm sure those numbers will be in Mr. Draghi's mind in his making his speech about QE and how they're implementing it, but I'm sure I'd like to see a recovery coming a bit quicker, a bit more clearly, and a bit more sort of broadly defined. But
well, I'm sure they will once the currency benefits of the recent months kick in, and I suppose there's also the oil benefits as well. So that's that. But let's look at what we got on the stocks front.
Okay, well, I picked out just a couple of FTSE movers today. Morrison Supermarkets up 2.38%, and actually it's a while since we've had some positive news for these guys. Company is growing market share again, according to yesterday's Kantar Word Panel data, and I think people have taken that to heart. I mean, let's be clear though, it was a 0.1% gain.
I was going to say that. I didn't want to sort of rain on your parade, but 0.1% is not well. I mean, it's
not brilliant. It's not going down though. I think that's probably the key.
Yeah.
So they're better, and so are Sainsbury's as well, I note today. And then at the other end of the food chain, the manufacturers, Unilever up 2.4%. They're upgraded by Barclays in a note on the wider sector. The neutral actually Barclays on the wider sector, but they've upgraded Unilever as the standout stock in that area. So they're up 2.4%. A bit like a juggernaut really, or an oil tanker. Unilever, it takes a lot to get it going, but when it does start moving, it gathers momentum quite quickly.
Okay, all right. Now on to something more, maybe a bit more spicy.
Yeah, staying with food, funnily enough, and this is just really a bit of a heads up to something that's going on and will probably be coming back to in the near future in this section. So Bill Ackman, who some people would know as the manager of a hedge fund called Pershing Square Capital, has taken a 22% stake in a company called Nomad Foods. Now, Nomad Foods is a so-called special purpose acquisition vehicle, or SPAC. It's a 350 million investment from Pershing Square. Basically, this is effectively a shell that's been put together to make acquisitions in a particular sector, in this case food. Nomad Foods was formed by two leading lights of the investment industry, a chap called Martin Franklin from the US and Noam Gottesman, who many will remember was a founding partner of GLG Partners. And that put Nomad Foods together last year, and in April they announced the 2.6 billion euro acquisition of a company called Igloo Foods. Bill Ackman has a history of acting in the food sector and working with Mr. Franklin, and he made a decent investment in one of Mr. Franklin's vehicles called Platform Specialty Products. It's been in there since 2013, and that's risen in value by 175%. He also worked with another one of Mr. Franklin's businesses called Justice Holdings, which was a big mover in Burger King. They brought it to the market, they floated it, and they also backed Burger King in their recent takeover of Tim Hortons to form a new dining conglomerate, I suppose is the way to put that. Nomad is actually said just today to be in talks to acquire Findus Group, a brand that many UK viewers will be familiar with.
Yes, I mean, it reminds me a bit of, I think, what James Goldsmith used to do, that sort of sector. He was actually quite into sort of the food area. So that maybe, it was a sort of safer area to be on the prowl than many others. I suppose the valuations are more straightforward, the companies are more straightforward, aren't they?
They are, and there tends to be a defensive element to them too. But if Nomad does buy Findus, and particularly the European frozen food business of Findus, that would make it the second largest frozen food manufacturer in the world. So this is a relatively new vehicle, but suddenly it's going to have, if this comes to pass, it will suddenly have quite significant standing on the world stage.
But is it a bit of an asset stripping thing?
I think probably more.
Sell off the different brands?
Maybe, or maybe just to get what they see as undervalued businesses, perhaps gear up the balance sheet in the way that private equity company would. No, what's certain is that there are 3 or 4 very smart people involved in Nomad Foods, and they're not doing it to lose money. So I think that will be a name to pay attention to very closely. Yeah.
Okay, great. On the US data front?
Okay, well, just a heads up, really. As you mentioned, we've got the non-farm payrolls on Friday, and I just wanted to flag to people that we've got the ADP, Dow Jones non-farm employment number for May today as well. Sometimes seen as a bit of a guide to what we can expect on Friday, though it's not uncommon to have a deviation of numbers between the private sector number and the state-sponsored one. So keep an eye out for that. In terms of other data, we've got the ISM non-manufacturing numbers for May, forecast of 57.2 against a prior read of 57.8, so slightly down as far as Institute of Supply non-manufacturing numbers concerned. Market composite PMI for the US in May forecast is for 57 against a prior read of 56.1. Just remember with these PMI numbers, a number above 50 is good, and so the further
these are quite decent, really.
Yeah, oh, absolutely. I mean, most lots of other Western economies would like to see a read of 57 on their PMI number, and then we've got a couple of items from the Fed. We've got the beige book, in which the regional Federal Reserve banks take a turn to look at the economic conditions as they see them using so-called anecdotal evidence. And then we also got 2 separate speeches by 2 separate Fed governors, Governors Evans and Bullard. They're speaking today at 2:15 and 4 p.m. Eastern Time in the States, respectively, which is 7:15 and 9 o'clock here in London. So the Fed actually can't seem to keep quiet at the moment. They're all out on the road talking, these governors.
Just talking and not doing anything on rates. It's very impressive.
It's keeping us all guessing. So that's something to look forward to later this evening if you're still looking at the markets then.
Right, and on the movers and levels?
Well, I've just picked out one stock today in the US. There wasn't too much going on pre-market, but Synchronos Technologies, SNCR, US is the ticker. They're up 19.4% at $42.53. It's a cloud software company, and the Wall Street Journal had a bit of a scoop saying that the company's up for sale and could well be sold to private equity, and they've been increasing in value all morning as that story's done the rounds. In terms of levels to watch today, just really tightening some of the ranges here. So FTSE, we've gone with 6,900 as a round numbers, if nothing else, and 69.75 to the upside. On the DAX, again, a bit of round number psychology coming into play, 11,300 on the downside, 11,414 I picked out as an upside level. Not too much change as far as the US indices are concerned. 2,100, again, round number for the S&P on the downside, 21.21, slightly tightening the range there for the upside level on the S&P. At the Dow, we've raised our downside threshold, if you like, to 18,000 and narrowed or brought in the upside target to 18,092. Currency-wise, euro strength again today, so 110.67 now is the new downside level to watch in the euro dollar, and 111.55 our upside level. Again, Aussie dollar strength, so 77.09 against the US dollar on the downside, and 78.20 our new upside level. Dollar yen is quite down for the moment, 123.86 I've nominated as our downside level there. 125.05 still the big level to watch on the upside. If you saw that SocGen note, as we were saying earlier yesterday, according to their strategist team, that 125.05 figure probably won't be an issue. Believe that if you want to. And then on cable, I've gone with 152.33 on the downside, just a little bit better again today, and 153.05.
So it's really tightening up here on your levels.
It is,
with
yeah.
the volatility going down ahead of the
I think that's exactly what that's telling us, Zach. Yeah, and maybe we'll see some more fireworks on Friday.
Okay, well that's it for the Wall Street Crossover Show. Darren Sinden, market commentator, Admiral Markets. Thanks for your thoughts and your wisdom, and we'll be back at the same time tomorrow.